everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the week ahead. Today we're going to be covering the latest developments in the U.S., Iran, Israel war. It was a fascinating 48 hours. We watched the electronic market open yesterday. We were on to something during the overnight, the late night stream that we did as soon as the war kicked off last Saturday or late Friday night here in the States. But it was an interesting open, and it's something that Pat Camp over in the live chat here on YouTube mentions. He says, Shane, this market's not going the way retail traders think. And I always say that that's the markets. It's not as easy as just showing up and buying something and hoping that it works. You have to have great trade location. If you have good trade location, then you're insulated from a lot of the risk that a lot of the others take. And what we saw is we saw a gap up in WTI crude futures. I'm going to show you that. Then I'm also going to show you the gold market. And these gaps are very much in play. These gaps are going to be filled. It feels to me like we're waiting for the next shoe to drop. Now, initially, what happened is the United States and Israel, they had complete air superiority. They hit supposedly thousands of targets, and it really looked like things were going to be an absolute rout. The military objectives were being met at a very, very high rate of speed. Now I'm hearing reports coming in from all over the place. Apparently a nuclear reactor was bombed, and that's a big deal. We had a terrorist activity here in the United States over the weekend where there was a shooting in Austin. We also saw we see Trump potentially not ruling out ground troops, and that has sort of roiled the markets as well. So we're waiting for the next domino to drop, and that's really what we're doing here. I'm going to outline the dominoes and the things that could potentially shake our markets up and which markets are vulnerable. Right now, it's very, very much a sparring match. It feels to me like traders are just sort of going in easy, not unlike myself. I haven't done anything today. I'm going to let this thing shake out for another, I'd say, 12 hours or so, and then get ready for Tuesday. So it's business as usual for me, the way that I approach things. But a lot of people were really anxious to rush in there and trade the volatility, and it didn't go so good. So I'm going to break down the key markets, what we need to be looking at. Also, we'll talk a little 9 EMA, not much. We had a 5-minute 9 EMA trade a little bit ago. I think it probably lost by now, but it was an interesting trade. Definitely one worth considering. This 9 EMA strategy and your crossover strategies, when these markets finally do pick a direction and break, you could be in pretty good shape because there is a lot of volatility in there. There's no question about it. So good to see everybody back on YouTube land. Let me see Tina Shane. Good to see you, Tina. Welcome. Jason, what's up, Shane? NV, good to see you. NV, welcome. We've got, let's see, Ralph H. Good to see you, Ralph H. Lita, Tuku, Andrea Garwal, the team over at the How to Trade community. I sure appreciate everybody showing up. We're going to dive right into some serious action. And one of the first rules that you need to understand about commodities trading, especially when we see heavy volatility. Bobby Bob, how was your weekend? Welcome to the new week. Yeah, it was a busy weekend. You'll see I'm sort of looking a little tired because I've been up, I put some man hours in looking at this military action in this war, that's for sure, and how this is going to impact the markets. We have a lot of content dropping this week, so just keep your heads up and be looking forward. Steve Francis, good to see you, Steve. Welcome. All right, let's go ahead and just talk about the first rule of commodity trading, especially commodity futures. Gaps get filled, and gaps get filled. That is the way that these markets work. It goes back to market profile ideas that really stem from Stoudemire back in the 1980s. These ideas are not new, but the idea is that if you jump over a price point that hasn't been traded in a relative period of time, you're going to go back and trade that price point. The idea is that the markets are always trying to figure out what something's worth. It's called price discovery. You know, you have a cell phone. You say it's worth 100. I say it's worth 125, right? And then we just decide to make a deal. Either you come up or I come down, or however we want to work it. But essentially, that's what happens in the markets. We just see it every day on a million different assets now. So right here, gold. This is gold futures. This is CME, COMEX gold futures, April 2026 contract. And you'll see we had a serious gap right here on the open. Yesterday, we opened up at about, well, the open was right up here. Let's see, what was the open? 5,360. It's different from your spot chart. We're going to go to spot in a second. But this opened up. We saw the immediate pullback, and then we sort of rallied. And since then, we've come off to near flat. You know, this gold market right now, this futures market's always going to be trading at a premium compared to where spot is. And the reason why is the geopolitical uncertainty and the war. No question about it. People believe there's a better chance of gold being worth more, say, in 6 weeks' time than it is right now today. So that's an interesting dynamic, and that's a function of uncertainty. So this gold futures market really is what everybody was looking at yesterday at about 5 o'clock Central, 6 o'clock Eastern. We knew there was going to be some big-time action, and there was. The bidders stepped in. The exchange opened trade up there somewhere right around 5,360, and then the traders took it from there, and you can see it got really choppy, pulled back, and then we rallied, and now look where we're at. we're right back to that gap area. So if we're looking at our spot gold, which pretty much all of you trade, many of you trade, you'll notice that we don't have that gap in the action. And the reason why we don't have that gap in the action is because this is an OTC market, and they essentially, the way that this data is being reported, at least from this vendor, is that trade picked up exactly where it closed on Friday. That's not true. I just showed you why it's not true, but it doesn't really mess with our initial, our Fibonacci's or crossovers or anything we want to do. Just that area right in here, right on that open, has been filled in. We filled it in. So gaps get filled, gaps get filled, gaps get filled. That's a big deal for gold. No question about it. So if I'm trading gold right now, after the big events of the weekend, I'm getting rid of everything, and we're just going to go back to basics. We're going to step back to our monthly chart. What does the monthly look like? Okay, interesting. First day of March, we almost forgot about that. First trading day of March, we broke above February's high. So we sort of made a rally at that all-time highs, and now we're starting to sell off a little bit. I think this sell-off is probably going to rotate back down into February's guts unless we see a major shift in the war situation, which we're going to cover here in a second. Let's go ahead and break this down and see if we can find a potential level. Now, I want to buy. I'm not interested in selling. I'm not interested in selling. A lot of people are going to make a lot of money by taking a shot and selling this market and getting in on the volatility, and I think that's great. But for me, I'm not interested. It's too darn risky, excuse me. Sorry, we're at war times now. My language suffers, but it's too darn risky. So what we need to do is we need to figure out exactly what we want to do with our entry. I want to be long. I want to buy in, but I want to buy in where I feel like I've got a good deal. Not a decent deal or a great shot at winning, right? I want a good deal. I want something that I know we nail. And right now, I don't see it. I mean, maybe here on the weekly, we go with a 3-week range. Potentially something like this, but I would wait for a much deeper retracement. I think that the great deal is down here, right around 5,065, somewhere down in there. That's absolutely fantastic, right in that demand zone. If you want to be aggressive, 5,200, 5,205s, probably pretty good. You probably can't go wrong with the Fibonacci's, bidding Fibonacci's. You just got to really be dialed in to what's happening in the market, in the news. That's what this is all about. It's all about the news. The news is driving everything. We're going to cover it in a second. WTI crude oil, much the same type of phenomenon, except for right this minute, the gap hasn't been filled in. Now, this was fantastic. I posted a few things on X last night that sort of showed you what I was thinking. You can see that big open was right at $75. Now, it's not hard to do this. A lot of times when we think about uncertainty, where's the market going to open at? What's going to happen? Remember that the powers that be, the folks that run the exchanges, the institutional traders, and the bankers that have those inside sales, they really are the market makers. And they're determining the price of anything really at any given time. And it's sort of our liquidity, our opinions that drive it up and down, right? Well, that's the idea. So what was the deal? Coming out of the break, coming off of the war announcements over the weekend, we had to pick a price. And it wasn't like we took a straw poll where they asked me and they asked you guys, what do you guys think crude oil's worth? Well, I mean, powers that be came out and said, open it at 75 and see what happens. That is as easy as it was. That's it. Open it at 75 and we'll see what happens. Okay, what happened? You had a head fake to the top side, 75.33, and you completely reversed. Now, I know a lot of retail traders on that open they bought it. I hope they took, the 25 pips profit that was there. On the live stream we had right when the news of war broke and Trump made his announcements in the middle of the night last Friday, I came on and I was asked repeatedly, where do you think crude's going to open? Where do you think it's going to open? What do you think it's going to do? And I said, I think it opens at 70-ish, maybe rallies up to 72.50. I was wrong. Now, I wasn't really wrong with where it was going to trade. It's 70 right now, but I didn't think they would open it at 75. And it didn't really matter where they opened it. It really didn't. Right now, what we need to understand is we're in a holding pattern. That's it, and that is all. We're in a holding pattern. The market does not know what to do. There's a couple of market drivers that are sort of dictating what's happening right now. But this market was inflated, and if it looks like it's going to be a fast type of a situation, meaning that the market's really not going to be too concerned with civil war inside of Iran. They're not going to be worried about the politics inside of Iran. What they're worried about is that the oil flows. The Strait of Hormuz is the big deal. That's 20%, 25% of the world's oil supply on a daily basis goes through the strait. Now, can that be closed down? Well, right now it's a no-go. Essentially, it has been closed. The insurance companies are in contact with the oil tankers saying, hey, listen, if you guys get sunk out there with a cargo full of oil, we're not covering you. We're not backing you because it's the most dangerous shipping route in the world right now. The Iranians have said they're gonna shoot anybody that goes through there. They've already said it. Now, can they? Are they capable of doing that? Maybe. If the Strait of Hormuz right now is sort of closed, it's a soft closure. But if it's closed, meaning if you sink a couple oil tankers out in that strait, suppose I've heard estimates that it takes anywhere from 6 weeks to 2 months to remove those and open those shipping lanes again if you sunk an oil tanker or 2 tankers out there. So it brings all these other things into play. We were talking about ghost ships earlier this morning, ships that were sort of labeled as not being oil tankers, but they were carrying cargoes of oil. That's all fine and dandy in international waters. That has to do with sort of evading the global banking restrictions and taxation, stuff like that. That's pirate stuff. But when you're in the Strait of Hormuz, I mean, it's one of those things where right now Iran has the policy, if it flies, it dies. If you're sailing through there, you're going to get hit. And that's the bottom line. So that right there is why everybody's really worried about that choke point, that vital choke point going offline. We've talked about it for so many months, and now it's here. So for right now, for all intents and purposes, it is closed, but it's a soft closure. It's not a hard closure. It's like, well, maybe it'll be closed for a day or two. That's what the markets are thinking, and that's why you're trading right around $70. Now, is it a premium to where we were Friday? Absolutely. Friday, we talked a lot about the possibility of Iran war. We talked a lot about this stuff. And now we're up around 70 trading sort of sideways inside of just an absolutely huge range. So one of the ideas that I put out on X last night, and it was right after the open, we went really this low, this spike low from back on Friday, right up here to this opening high. And I said, this is going to be an interesting area. 62% is going to be an interesting area, somewhere right around 70. I was actually a little bit lower than that. Excuse me. It was down in here. But we were talking about 69.50-ish. You can go back and check the tweet on Shane V_Trader at X. But definitely interesting. Definitely an interesting market and one that we've got an opportunity to trade well. The real question is what do we want to do from here? Let's look at the U.S. oil contract. Remember, if you want to trade anything that we're talking about today, anything at all that we're talking about today, go ahead, head on over to Switch Markets. You will be trading the WTI CFD over at Switch. I'll show you that in just a second over on MT5. But it's a big market right now, and everybody wants to trade it. There's no two ways about it. So if you're interested, be sure to check in with Switch. They can get you up and running with your WTI contract relatively quickly. So what do we have here? This is the U.S. oil chart. This is something that I was looking at last night, and I said I just drew a great big line through 672.50. And you can see that's exactly where we rotated. And then we sort of came off now. Right down here in this U.S. oil, you can see that your gap is right there, right in here. So gap area, right around 69. Do we sell off under 70? I think so. I think we're going to fill this in. Does that mean that we're done going up? No, it doesn't. We're waiting for the next shoe to drop. So let's go ahead. Let's back off to that daily chart and have a look, see if we've got a retracement. Shane, do you want to buy or sell? I want to make my mistakes to the long right now. I really do. Right down in there, what do you got? Interesting. There's your gap. There's your gap area. Can we sell right now? It's really risky. Very, very risky. It's one of those things that I wouldn't even be messing with just because if you do sell and you see something drop, any sort of strike, if one of the aircraft carriers that's in the region gets hit by a hypersonic missile or something, crude oil goes to maybe 100, maybe 125, and it happens fast. You don't want to mess around with that type of thing. Now, if you want to sell for short-term scalps, okay. I'll allow it, but just have a stop loss down somewhere because if that market gets out of hand, you've got to be very, very careful. Steve France, it's good to see you, Steve. But right now, I would want to make my mistakes to the long. Now, it's not because I'm really bullish crude oil, but with this situation, with this geopolitical environment, you have to respect the top side of it. So for me, if I get a pull back down there to about 68, I think that's probably where we're going to be going long from, right down in there. And it could definitely come into play as soon as this afternoon. It could come into play anytime. But that area right in there is a pretty good one. The bottom of that gap zone, 62% on that daily retracement. I think that's a fantastic area to step up and maybe make a little bit of a commitment towards the top side. I like it. One thing to put out there that is interesting. Here's a trading dome. The trading dome's really calmed way down. I mean, it's moving around a little bit right now. And typically you don't see crude oil move in 3 and 4 pip increments. But compared to where it was earlier today and on yesterday's open, it's not bad. You can see right now your spread on a U.S. oil is 0.01, 0.02. That's very light for a U.S. oil CFD. I'm interested. I think it's a pretty good deal to be trading right now. It's not bad. Just if you do take a short side of this market, understand what can happen. I mean, you could see a major jackpot to the top side. You really could. So be careful. You guys know what you're doing by now with your risk. 1% to 3% on any given trade. These markets that are moving around the way that they are moving, they pose an extra risk gradient. You need to be able to understand that and just understand that the big move, I'm not psychic. I don't know where the big move is going to come or when it's going to come or if it's going to come, but we understand the market drivers can send this thing to the moon, and it can happen fast. And I'm not talking about from 66 to 75. That was a major gap up. That really was. A close of right around 66 to 75. That's a big move. That's $9. That's a $9 premium because you have a new war to deal with. What happens if you sink an aircraft carrier? What happens if there's an attack in the United States, a major attack on a metropolitan area? Crude oil doesn't go to 75. It goes to 100. So I respect the top side of this market. I'm not sure that any of that's coming. Right now, the market's pretty calm. It really is. It's pretty calm. So there's a lot going on there and a lot of things that are absolutely fascinating market drivers. I've got some questions there. I'm going to cover those in just a second, but I do want to show you a couple things here on this. Here's your MT5 platform. And you can see we had an RSI sell, an EMA RSI sell up here that's not really performing very well. I would say that it's decent. But remember, check your email inbox. So your inbox on this platform, you'll notice that you get all sorts of messages. And this week, we're going to be doing some special live streams. I'm going to be doing a series that's just centered around what we've been talking about. Tuesday, crisis in the Middle East, how U.S.-Israel war is impacting the markets. I'll have the latest news for you there. Wednesday, Iran-Israel-U.S. war, how to trade oil, gold, and silver. We'll focus on commodities there as well. We're probably going to be doing that every day anyways. And then Thursday. So we've got all the links there in that message, and that's going to be exclusive to the Switch Markets clients. So you're going to want to catch that. Those are going to be at 13:30 GMT time. I'll be up bright and early covering these before the U.S. Open. That's going to be a great time to cover them. Definitely going to want to tune into those. If you haven't already, we're Switch Markets on YouTube. So you can check us out there and be sure to tune in. As far as our normal schedule, we will be available at our normal times, which is about 1600 GMT across all of our platforms, Forex Signals TV, how to trade on YouTube, and those are going to be pretty good. Also on X and on Switch. So we're going to be going twice a day for a while here because this is going to be great trading. It's going to be fascinating time to be in the markets. So I welcome everybody to those. Be sure to check those out when you get an opportunity. Also, we're going to have the Switch Markets newsletter. It's going to come out a little bit later today. Well, it's going to be right before the U.S. Open, or the London Open, excuse me. So I'm going to be all over that. We're going to get that out to you. And, other than that, we're just, 24/7. That's the way that this week's going to be, especially when war breaks out. There's an old saying, money never sleeps. Money never sleeps. So I'm going to try to stay clean shaven. We'll see if I can give it a shot. Maybe get out to the gym. Maybe a little bit later today for a couple-hour break. But it's on now. It really is on. We have an interesting trade that sort of developed right here, and then I'll get to your questions. This was an interesting 9 EMA trade. 5-minute chart, NASDAQ, E-mini NASDAQ. Well, actually, it's based on that. This is the U.S. Tech CFD. The U.S. Tech CFD, and right now we're just sort of took a sell right in this zone right here, and nothing's really happened. So stop out point, relatively straightforward, right above this swing high, and we're going to see if we can get a little bit of bearish follow through, which many of us are expecting today. We're expecting the markets to finish in the red. Started out in the green. We'll start in the red, then traded to the green, and now we're back to the red. It's not a bad time to be trading a strategy like this just because there's a lot of volatility in there. There's a lot of volatility, and that can give you a chance potentially to make a little bit of money. And you can see this one's starting to come off a little bit in our favor, but I'm not overly optimistic. We'll see. Very, very tight trade. All right, let's see. I got way behind on the live chat, guys. If you have any questions at all, be sure to ask, and I will certainly do that. Let me see. Lewis, good to see you. Lewis, welcome. Pat Camp. Do you think oil hitting $150 per barrel is realistic with Trump anticipating the attack to be drawn out over 4 weeks? No, I do not. No, I do not. The only way that oil is going to hit $150 per barrel, and I saw those valuations back in Arab Spring in 2011 when we saw the really very similar activities, just without the U.S. airstrikes, but destabilization campaign in places like Egypt, places like where was the other one? Gaddafi's place, Libya, up there in northern Africa. We saw oil go up to about 150. It was right in that zone, 130, 129, and our ranges, daily ranges, were huge. No, I don't see that happening. I think the only way that you get $150 per barrel read, a couple of scenarios, and they're bad. So let's just talk about them. We could be looking at potentially large-scale terror attacks from sleeper cells here in the United States. That's definitely a possibility. We could also see somebody touch off a thermonuclear warhead. That definitely will send you to 150 overnight, no question. Even if it's just a tactical nuke, you could see that as well. I think that's basically what I see. From a conventional warfare standpoint, you don't ever want to jump the gun, but it really does look like Iran is in way over their head. And, we sort of saw the scattering of missiles all over the Middle East. We didn't really see any concerted efforts. It didn't look like there was any rhyme or reason to any of it. And so it didn't really look like a defense, a formidable defense. Now, I'm not saying that this thing's over, because it's not. Supposedly the U.S. is going to bomb for another 4 or 5 weeks. That's what Trump said earlier today. I don't know if they will. I think that might be overkill. We just know that the U.S. has about 4 to 5 weeks of munitions in the region. So I guess they're going to go shoot all the missiles. I don't know. But I do know that 150's reaching back up for sure. Let me see, Preyas. How do you trade the U.S.? Let me see. How do you trade the USD to send potential trade ideas, and does it still send those? We put out actionable trade ideas at How to Trade. Yeah, never mind. How to Trade used to send potential trade ideas. Does it still send those? Yeah, I send one out typically every day, Preyas, and those are available in the How to Trade trading room, or if you go into the trading room and click follow on me, it'll get emailed out to you automatically, or if you just check the front of the How to Trade website, you can see exactly where our trade ideas are, and I'm actually going to do a few trade updates here in just a few minutes. Let me see. Proud Texan, how you doing, Proud? I'm bearish. Bullish on oil, though. Yeah, I'm not really either yet. I think that the oil thing is, the thing about markets is they slaughter people, slaughters as many people as it can. And I know for a fact there were some retail traders that just stepped up and bought. They just stepped up and bought crude oil yesterday saying it's going to go up. Well, it may go up, but you're probably going to get stopped out. I don't know many retail traders that can take a $6 draw, trading multiple contracts at WTI. I just don't see it. So if you wanted to take a trade, take a trade to the long, take a look at those levels we were just talking about. Those are absolutely key. Absolutely key. Let me see, pack up. It's amazing that with all these innovations, AI and billions, we still can't go past the Strait of Hormuz. Well, I mean, it's all about geography at the end of the day. It really is. I mean, look at this. Look at these strikes. This is old-fashioned firepower. And it's just firepower. I mean, I think the Israelis sent in the opening rush, they had 200 aircraft. The U.S. had a ton as well. I mean, it's such an overwhelming show of force that, what do you do with it if you're Iran? Shoot a bunch of missiles off. It's what it looks like happened. No real rhyme or reason to it. I'm not convinced that we'll talk a little bit more about it in a second and give you some strategies and scenarios. Let me see. Tina Jing, right? Roughly 20% of the global supply, daily global supply. Absolutely, it's huge. That's how all the oil gets out of the Persian Gulf region. That's it. That's all. You got to get it out of there, and that one little choke point really sets you up for some real issues. And that's what Iran's falling back on, potentially shutting that down or using that as at least a negotiating chip right now. That's for sure. Let me see, Preyas, can I be part of the newsletter, please? Yeah, absolutely. Just go ahead and let me see. I can get you the link. I believe I have the link somewhere. Somewhere I got it. Yeah, good question, though. Be more than happy to do that. I'm going to drop that in the live chat over there on YouTube. There's a newsletter that's going to drop before the London session. Also, we'll put out a video that'll have all our picks of the week, our hot picks, and I'll be covering energies and metals as well. Let me see. How is spot gold looking like? It looks like profit taking has been going on. Yeah, absolutely. As when we talk about spot gold, we're talking about that XEU USD, and what you've got essentially is just a big sell-off off of today's high. It went up right to about 54 and a quarter, somewhere in there, and now we're down to about 53-ish. So, yeah, I mean, I would be looking to buy this market, but I'm in no hurry to sell it. Definitely coming off of those highs because the situation is sort of stabilizing already. It's really difficult, really difficult. Let me see. I just started learning how to trade using TradingView. Is there any tips you suggest, Bobby? Bobby, there's TradingView is a great platform. The best thing that I would recommend is just to if you've just got the basic version, you can run one indicator, I think, one or two on your charts. Just pick a few indicators out, put them on there. Start looking at price action. Just put a little screen time in. Maybe read through some trade ideas. I know they have a great community over there where they list trade ideas. You can see how some other people are working the charts. But as far as just getting started in the markets, the biggest thing to do is just to take a look at some formations, watch price action, and sort of take your time. See if it makes any sense to you. Realistically, that's what you got to do. For me, that's how I learned. I just started getting in front of the charts, sitting right in front of a 30-minute chart and just watching price move on a trading dome. It's a challenge with gold because the spread's so epic, 107 or whatever. But you definitely just sit here, watch price go, start looking at support and resistance, maybe a couple of moving averages. It's not a bad way to begin, that's for sure. Good question, though. I asked tomorrow and in general this week, how do you think spot gold is going to reach 54.50 and above? No. We went right up to 54 and a quarter and sold off big. And now we're starting to trend down a little bit. I really like my support zone coming into play right down here at about 52, 52.05. I would love a long scalp off of that, maybe for $10, something like that. But no, I don't think we're going to go back up unless something happens. Unless something out of the ordinary happens. We'll talk about that in just a second. Absolute praise. You're welcome. Steve Francis, is the DOM only available on commodities and not Forex? No, you can use a trading DOM on anything that you'd like. So here's a trading DOM. As a matter of fact, I trade futures on it. But you can see sort of your issue here. So you've got Euro US dollar, right? So here's your DOM. And that spread is significant right now. It's about 1.6. That's really big for the Euro USD. That's really big. Usually that's about down around a pip, maybe even a half a pip or zero. A lot of brokers will offer the Euro USD with no spread and work a flat commission. But you could see that on a trading dome. It's not as easy because you could see how that spread is reflected in the pricing. But it's there, Steve. You could just just pick your Forex pairs and use a trading dome. Over on MT5, if you're interested in that, let's see. This is the US 30, but let's go ahead and you can just right-click here and just click depth of market. There it is, and that'll work just fine for a Forex pair as well. So yeah, I grew up on the dome. That's how I learned to trade, was the trading dome. The chart traders are pretty neat too, though. They really are. A lot going on there for sure. Let me see. Naomi Rising. Does the 13 EMA still get considered when using the Piranha strategy? The Piranha strategy was, what is that? The Piranha was just Bollinger Bands. There was no EMA in the Piranha strategy. That was just Bollinger Bands. The 13 EMA is sort of my go-to EMA, my EMA that I learned back in 2011, and it's my go-to. The 9's good, the 20's good, but the 13 EMA for me, I've combined it with my Bollinger Bands, which are 24 EMA, based on an EMA, high-low of 2, so a median, and 1.9 standard deviation. That's my own custom look at the markets. Bollinger Bands, 13 EMA overlay. Doesn't really have anything to do with the Piranha, but I like the callback to the Piranha, Naomi. Thank you. I haven't thought about the Piranha in a while. The Piranha, I believe, was 20. We can set up a Piranha trade right now. Let's go. That's a great callback. That's a good one. Let's see. Let's open the layout. I know I have a Piranha in here somewhere. Had one built. Got the pendulum. Oh, the Piranha. Great Britain Pound USD 5-minute chart. Trade some Piranhas. It's actually a nifty little strategy. It's not too bad. I kind of like it just because it's really simple. But you'll notice Bollinger Bands, I think we had them at a 12 based on a simple moving average close and a 2 standard deviation. You'll notice at that midpoint, there is no EMAs used in the Piranha. So right here, if we were going to trade the Great Britain Pound USD Piranha, we would be looking to buy right from that lower Bollinger Band. Very simple. You can see we sold up here at the top. Then we came down and got the winner here, and we'd be looking to buy right down there at 133.97, somewhere in that zone. And then you're looking to get 5 pips to the top, and then you're risking 10, or was it 3 pips and you're risking 8, something like that. The Piranha, good one though. No 13 EMA in the Piranha, that's for sure. Let's see. Now, let me see. Zuba, I got a problem with the pattern finder, username, and password. Anyone can help. The best thing you can do if you're having a problem with the pattern finder, any of those EAs, is head on over to the switch markets. I'll show you right now. Head on over to switch. You go here, and you go right there to the live support. Click that bubble. Get in there, and you can get somebody on the other end of the chat that can help you line up your username and password to get those up and running. Probably for MT4, if I had to guess. Or I really need that for my MT5. Yeah, maybe do that with your MT5. Just contact that support. Go right here. Give that a click. Type in your inquiry. More than likely, they're going to have to reset your username or password to get you access to those EAs. That's for sure. All right, we've still got a lot to cover, guys, so I'm going to go ahead and get cracking here. The Piranha, though, that was a good one. Good callback. Love it. All right, so what do we really have going today? Well, we've got a lot going today. We got a trade update here in the Great Britain pound Japanese yen that I did want to cover because I think it may come into play maybe a little bit later this week. You can see we had a bid right there from the 38% retracement that we were looking at right around 208.50-ish. The actual retracement's at 208.31, but we were looking at 50 potentially to get a nice runner and a bounce off of this support zone before we took out the low right over here in February. So when I'm looking at something like this, I'm saying, well, is it still in play? And I'd say, yeah, it is. It is. So we almost got it. The low was 209.35, and we were down there at about 208.50, somewhere in there. But it was really a nice open to the downside. We had a real good chance at that. So I'm still watching that as the week unfolds and develops. As far as our other trade ideas, natural gas is a big one. Right now, everybody's wondering about natural gas. Now, there was a big news event. Iran did hit an LNG plant in Qatar and knocked all the LNG, liquefied natural gas, supply and exportation from that particular facility, knocked it offline. So we would be looking for a big move up in natural gas. Well, you didn't really get it. For as many headlines as I read about natural gas, you didn't really get it. I mean, you got a little bit of a move at about 3%. Okay, that's okay, I guess. But what you have developing here is just sort of a real tight day. We were looking at 2025's low, 2639 as being a potential entry there, or just above that, excuse me. I think that could come into play, especially if the situation starts to smooth out. Now, in this day and age, things move so fast. If things start to look like they're calming down by the midweek, expect some bearish action in some of these assets that have really been pricing this conflict in for quite a long time. Natural gas is part of that. So if we do get a little bit of a sell-off, remember, we're in March now. March, I'm probably looking for some bearish price action in natural gas as we go into the spring months. Definitely could be looking at something like that. Definitely could be looking at a pullback there. So I'm watching natural gas as well. It is a difficult commodity to trade just because it's thin and the volatility can be absolutely staggering. All right, here's our Week 10 calendar. We'll get up and running with the Iran war. That's going to be pretty much what we're going to be talking about every day, any developments. We don't know what's going to happen, so we have to stay frosty. But don't worry, we'll be all over it. Tuesday, FOMC members speak. That's sort of big tomorrow. Kashkari and Williams are both going to speak about what this war means, probably to the future of monetary policy. And you'll notice a very interesting thing happened since this war kicked off. What happened to the U.S. dollar? U.S. dollar is up about 1% today. Now, I've been incredibly bearish on the U.S. dollar the entire year. I still believe that the short side of this market is the one to be on. But we also talked about what would peace deals, what does war do to the United States dollar? Well, it typically sends it a bit higher. And the reason why is anytime there's global geopolitical strife, a lot of times the USD, the greenback, is viewed as the ship with the least amount of rats. And you do get some investiture just from that. But don't lose the forest for the trees here. Don't get lost in all the bullish USD headlines that I saw today because I don't think it lasts. If you wanted to sell anything, DXY rallies right up around 99.46. That's our 13-month EMA. You could probably step up and short that and be just fine with it. For me, I think that it's going to be a pretty good opportunity to get live in this market a little bit later this week. You'll notice I haven't covered much with Forex pairs just yet. We did have a big move in the Euro USD, though. I mean, it's not, let's not ignore some of the Forex action. I mean, that's a significant drop, I would say, wouldn't you? Look at that drop. About 1.4%. Went right down to 78%, which I believe was a monthly 78%. Yeah, weekly 78%. Let's go back to our weekly. And I know I'm moving fast, so if you get confused, just ask a question. I'll be sure to slow down. But right there, low is about 116.85. That's a big-time zone. I mean, that's a big-time zone. It's one that we had outlined from late last week. I really liked it. I said, this is pretty good. Now, I didn't know war was going to break out. But you could see that move today is huge. We didn't really do anything last week. I was trading rotation Euro USD futures, Euro FX futures all week long. It was a piece of cake. You just basically playing moving averages, playing range numbers. It was easy. Well, now it's not easy. Look how tight that week is last week. That was easy. Now we're going to have to start considering a trend, right? If you break beneath 78% and then head down to the downside, you're going down here. Check out this swing low, which is at 115.77. So for me, right now, I still maintain sort of a sluggish, bullish bias. Realistically, that's sort of the camp I'm in. I think that we probably reject 78 and the Bollinger midpoint, maybe trade in here. But it's all about war, and it's all about developments. And if certain things develop, if this situation escalates, then you're going to see the big move in the U.S. dollar where it may challenge some of those levels we just showed you on the DXY. And in order to get these rallies up around 101, 100, 101, you're going to need to see the Euro USD come off. It's a big time zone, guys. It's a big time zone, and we're trading there right now. Thanks for bringing up the Forex stuff because sometimes I get ahead of myself and I just go commodities heavy because that's my specialty. But the dollars, we knew it was going to be great trading this year, and it is. It is. Okay, so you got some FOMC members tomorrow. Wednesday is going to be the ADP non-farm employment change and EIA inventories. The EIA number is going to have more importance. It's going to have added importance. And the reason why is everybody's talking oil right now. There's probably 10 or 20 or 50 of you out there that have never watched any of these live streams that are doing so for oil. And right now, Wednesday, big day for oil. The EIA inventories are going to come out, and it's not because that number in itself can move the markets. It's just because it's one more thing that's going to drive volatility. So be ready for that. I'll have some coverage. I'll actually be on Wednesday before the markets open to give you a little preview of that EIA number. It's going to be important. Thursday's jobless claims. That's not, honestly, there's nothing scheduled for Thursday, but I have a feeling it's going to be a crazy day. But jobless claims aren't going to be the reason why. It's going to be all about war, all about geopolitics. That's the bottom line. Friday, U.S. non-farm payrolls, NFP. We're going to have NFP live for you this week. So you're not going to want to miss out on that. We are going to have an opportunity potentially to make a few scalp plays and trade some serious volatility this Friday. So there's probably no donation Friday this week. Bring your lunch bucket. This week's going to be a big one to trade. That's essentially our lineup. Now, what we have right here, 3- and 6-month T-bill auctions. This occurred today. These are T-bills. This is the U.S. government trying to raise money, and it's no wonder in the 3-month T-bill, you saw a bit of a jump in yields. So what those are is the higher the yields, the more they want your money, essentially. So what does that mean exactly? Well, it means that this conflict, this war, all of a sudden maybe shifted our ideas towards what monetary policy is going to look like. Doesn't necessarily mean rate cuts. Those yields ticked higher because they believe the United States government is going to place the impetus on raising money because they're going into a prolonged war. Interesting stuff. Not the biggest move in the world for the T-bills, so don't get carried away on those auctions. But yields definitely clicked higher. They went back up over 3.6% for the 3-month. I think that's significant. That's a byproduct of what we saw over the weekend. So definitely a lot going on with regards to price action, across the board. We had a few other things that we wanted to cover today, mostly news. And then if there's any markets you'd like to look at, I'm more than happy to do just that. Let me see. Lebo, how you doing? I'm doing well. Zubu, thank you. You're welcome, Zubu. Let me see. Preyas, you are brilliant, sir. No. Not even close. But we're gonna unpack this thing one stone at a time. I can tell you that. It's not gonna be good. I don't like profiting during periods like this. It's not because I'm some sort of social justice warrior, a moral oral, or anything like that. I just, you grow up around this stuff. A lot of guys, a lot of friends served in Iraq. Never miss a chance to listen to anybody that served there and what they have to say about their experience. Also I've said a lot about my family. My dad was drafted, served in Vietnam, told me all about what war was, taught me from a very young age what it was. And then I had both grandfathers in the Navy, and I had uncles that all served. So there's a lot of background there. So believe me, I'm not sitting here smiling like some money addicted junkie just because the markets are moving. I'm happy. No, but we have a job to do. But at the end of the day, we have a job to do. And if we're going to be traders, then we trade it. But we got to be smart about what we do, because this isn't the time to be careless. Can you do very well? Yes, you can. With this kind of volatility, yeah, this is probably the time to start trading. But be smart about that risk. Dial your risk in. Watch your trade locations. 1% to 3% any given trade. I'll look the other way on a 5% to 7%. Maybe if it's that great of a trade, right? Also, your stop losses, you've got to use them. They've got to be on the board somewhere, because these are the types of markets that can explode so fast. You want to make sure that you can at least get out. And that's the biggest challenge trading in environments like this. Sometimes you can't get out. And if you can't get out, then you're in real trouble. So we got to know what we need to know before we need to know it. And I think we can game plan and do just that. Let me see. Preyas, I used to be subscribed to Forex Signals, but there were other guys that were having live sessions. Yeah, there was we've gone through a lot of mentors over the years. A lot of them really smart guys, and most of them just went to do some other things. Pursue other endeavors, which I can't fault anybody for that. I respect that. That's for sure. Tina Jing. Hi, Shane. How would the war affect the indices, even the Nikkei? Yeah, let's look at the indices, Tina. Great question. It's so easy to leave something out on one of these live streams, that's for sure. Lebo, I just need your take on something. All right, let's look at the indices first, and then we'll dive into that question as well. Good questions. Tina, how would war affect the indices if it's a bad one, if there's surprises, if there all of a sudden the terror attacks that many of us believe are a real possibility in the West, not just the United States, but in Europe, places like London, places like Germany, places like that. You really know that a large-scale terror event in the Western world is going to shake the markets, and it's going to be something that could be a crash. There's no two ways about it. So that is definitely, I believe it's priced in right now. We're going to look at the volatility index. That's a great place to start talking about the indices. But I believe it's sort of priced in. Now, what could the war actually do to indices? If it turns into a prolonged event that looks like it's going to be a major drag on economic prowess, it could have a negative impact in the short run. However, the increased government spending that typically is undertaken on long-term wars can drive markets higher. It can foster economic growth because it's a major investment in not just your military infrastructure, but also your civilian infrastructure. There's no two ways about it. If you take a look at what happened after 9/11 in 2001, as the markets essentially 2001, the towers fell, war was declared, and the United States basically went all over the world on their campaign, their war on terror. And that's all fine. And if you look at what happened to the markets as the monetary policy got looser, as interest rates went down and the government spending kicked up, and all of a sudden all of this money was being spent on the war effort, take a look at what happened to the U.S. economy. As we got up to that big bubble in 2008, 2007, and 2008, for a few years there, it was humming pretty good. It really was. And the markets grew. And then the debt bubble popped. And then they crashed. So the question you're asking is incredibly sophisticated. What I would be watching right now is for huge spikes in commodities. If you do see the big spike in crude oil, if it does go crazy because there was a major event, then yeah, that's going to hurt stocks. That'll create a panic, and that'll hurt stocks. But over the long haul, as long as things settle down into sort of a normality, I know that's horrible to say, but it's the truth. We saw it with the Russia-Ukraine war. If it settles down into normality, then it's probably not going to do a whole heck of a lot to them. But we're ready. We're ready. So it's a great question, Tina. I mean, there's no doubt about it that we've got to be aware every single day of what's happening on that front. Long-term averages, the VIX, the volatility index. I've talked about the CBOE volatility index many times. The VIX is Wall Street's fear gauge. The higher the VIX, the more fear in the market. And they figure out the VIX, they got a bunch of secret sauce, but it's derived from deferred month S&P 500 options contract premiums. As those premiums start jumping around, the market says, oh, what's going on with the options traders? Do they know something? Essentially, they're pricing the S&P 500 a couple of months down the line. And when that starts going crazy, that means that there is some major questions surrounding the viability of U.S. equities into the immediate future. That's a very fancy way of saying, hey, when the VIX goes up, it usually means stocks go down. And when the VIX go down, it usually means stocks go up. So what do we have here? Long-term average, the LTA long-term average is right around 21. That's essentially what we're looking at. That's a pretty good barometer, sort of a line in the sand. A lot of folks say 25. A lot of folks believe 30. When we start creeping above 21, the risk profile of U.S. equities becomes elevated. And when it becomes elevated, you're in a situation probably that you're going to see a market fall as opposed to rise. Now, 21's not elevated. When we start to see something up around 30, that one right there was 28.99 back in October of 2025. November of 2025, right there at 28. This was the panic, the tariff panic of April of 2025. We were up around 60. That meant the market, the sky was absolutely falling. This spike right here in August of 2024, that's when the Japanese carry trade came unwound. There's a lot going on here that can drive this directionally. These are crashes. These really are crashes. Now, they didn't last very long, and that's one of the things. Look at this one. Back in 2024, only lasted a week. So remember, if we see something crazy like that, and we might, if we see something crazy like that, stocks are typically going to be hit. So if we're looking at, say, the U.S. 500, CFD, big picture, weekly chart, what do we got? First trading day of March, what's happening out there? We've got a war. We've got a new trading month. What? Not much. Not much. Trade so far, what are we up? 0.16. We're flat. People don't know what to do right now. As far as do we want to be long or short? Well, if you're looking at the S&P 500, you're definitely looking at 7,000. No question about that. That is the level. No question. So if I was a doomsday guy and I said, well, I think Iran's got a big secret and they're getting ready to pull some shenanigans out west, maybe, or maybe there's a nuke we don't know about. We don't know. You could almost justify taking a short from this area and stopping yourself out up over 7,000 and just playing a major catastrophe. The problem with that strategy is there's folks a lot smarter than me and you that have known exactly how this thing's going to unfold, and they've known for a long time. And stocks are still up there. They're still high. Think of it. They haven't passed the insider trading laws yet. The senators, the House of Representatives, all those folks in the U.S. government probably are holding longs. Nobody's liquidated. Nobody's really spooked the elephant yet. So when we look at this, I'd say, the rationale says that you could probably go short and play for a major catastrophe and profit from it. But my gut says, nah, these markets are still really high. Right now, it looks to me like the markets believe this is going to be over pretty quick. That's what I see. I don't know if that's true. So you could see something like that. As far as, would I want to buy? Well, let's say something does go haywire. Let's say we see an event that scares us, truly scares the markets. There's no doubt 7,000 is the game. Double top right there, 7,013, 7,002. That's the game right there at 7,000 for the S&P 500. Spike low here. Nice spike low there. There's spike high. There's your pullback zone, 6,161. Would love it if we got an opportunity down there. And it may be later this spring. We don't know. Maybe this summer. Maybe things don't go well. And then you do get an opportunity at that type of a buy. That would be something that we would really hang our hat on. That would bring a lot of investors into the market. But we're not there yet. We're not there yet. On shorter time frames, key levels, keep an eye on last month's low right there. Definitely got to be watching that. That low is right around 67.30-ish, somewhere in there. Keep an eye on that. That's key. And then last month's high, of course, if we break higher, if we break above that high, it means we're headed north. So it's a great question. You also wanted to cover the Nikkei. I got to get the Nikkei up on my tote board. I'm a big fan of the Nikkei. I think it's a fantastic. Let's just go ahead with IG. We'll do the 225 cash here. All right, sort of gave the breakdown last week of how it was easy for a while there. 50,000. It was fantastic. It was fun trading the Nikkei. You'd love to see a pullback to that zone again. What could happen to the Nikkei if things escalate? Well, the really big question that surrounds a prolonged war by the United States and Israel in Iran is what happens in your other theaters. What happens in the Russia-Ukraine? What happens in China-Taiwan? Do these folks ramp up operations? Does China go into Taiwan now, believing the United States is too overextended in Iran? Possible. If China goes into Taiwan, what happens to the Nikkei? It probably comes down. Because of essentially it would be a restructuring of the region. And that's something that Japan, and investors in Japan are very cognizant of. They're cognizant of that rivalry between Japan and China. That's very real. I'm not going to get into it right now because I'm sort of speaking out of turn, but I do know quite a bit about that. And I think that would be the outlier for the Nikkei. Now, as far as what could economics mean, well, I mean, it's just BOJ stuff. U.S. dollar stuff, what we've talked about repeatedly forever and ever and ever. It's not an outlier. We know what monetary policy is typically going to do to the Nikkei. We may see a correction in the Nikkei, but odds are you're going to be headed up, especially probably later this year after all the interest rate cuts have been executed for the United States and the BOJ holds firm, and then we start to stabilize. Then you're probably going to see the Nikkei go up. But the outliers right now, with the world sort of feeling like it's teetering on the brink, anything can happen to the Nikkei. I expect big volatility. I expect great trading. All right, that being said, how would I be looking to trade the Nikkei? Now, believe it or not, I like this formation. I absolutely really like this formation because it is a bullish pennant for sure. There's your bullish run and your sideways action. A nice Fibonacci retracement sequence can be built right from that spike low right there to that top right up at 60,000. 60,000 is key. And then where did we go? Where did we go to open the week? We went right to 38%, 56.8, 56.850, and we've bounced off of that. That's a big zone. So if you trade the Nikkei, keep an eye on that as downside support. Definitely want to keep an eye on that. I tell you what, though, Tina, you're not wrong. You're not wrong by looking at the Nikkei. You're not wrong. It's a darn good market, and it's a great diversification tool. That's for sure. Let's see, quick drink of water. So I hope that helps. Hope that answers your question. Lebo, I just need your take on something. Some traders trade way too much because of fear of missing out. But is the opposite also true? Some traders trade way too little because of fear of losing opportunity. Yeah, I would be one of those people. That professional traders, guys on YouTube, they would say you don't trade enough. I remember my mentor, my uncle, he used to get on me all the time. He goes, you got to be more aggressive. You got to be more aggressive. You got to be more aggressive. And so this would be a day where I haven't executed a trade. I haven't taken a trade. And a lot of folks are going to sit there and go, how aren't you trading this? This is great action, especially for crude oil. Why weren't you short from 75? And the answer is I don't deviate from my plan. Monday for me is always a game planner, always. I don't care what happened. I don't care. It was a volatility. It's a great day. I don't care. My game plan is always game plan, levels, discipline. Watch what happens. Tuesday, Wednesday, Thursday is when I drop the pedal to the metal. So to answer your question, Lebo, yeah, there is such a thing as being too cautious. Now, there's difference between being disciplined and having analysis paralysis. I mean, if you have a system and a strategy and that market comes to you, you've got to make the trades. You've got to make the trades or else you're not going to get anywhere. So there is a fear of trading, and that usually happens after folks take a few losses, and there's like, and I've been there. Believe me, I've been there. But you get past that. After a while, you just have to keep trading and then manage your trades. Be aggressive. Get in there. Take your trades, but manage them. Watch them. If you don't like what's happening, cut them off. Go on to the next one. You know, you don't have to be perfect in this game to make money. And I sort of broke that down. I showed you my numbers. My numbers aren't that great. You looked at them last week. A lot of people were like, geez, I thought you made a lot more than that. I said, well, that was one account. It was one account. But what I'm trying to show is that you don't have to have a lot of money if you're just consistent and patient and execute the trades as they come. You could be in really great shape. So, yeah, it's a fine line, Lebo, between trading too much and trading too little. But you can't ever be afraid to trade. If you find yourself afraid to get in there, you're in trouble. That's for sure. Let me see. Tina Jing, Baby Pip said the stock's barely down. Well, if the Baby Pip says it, I agree. Nothing wrong with that. Let me see. F8. Good to see F8. Can we see charts, or is this more about looking at you? All the fancy clothes that Mike set up is not adding any value to the context here. Just put up the data, share the charts. Just saying. All right. Never mind. I ran that BS. Do you have charts? Okay, now I'm interested slightly more. Thanks. Blowing me up. F8's blowing me up. Yeah, I gave a like. Looks like I'll be settling in here for a few hours today. No, you're not. I'm off here in a few minutes. I will be back tomorrow, though. Be sure to check that out as well. As far as putting the charts up and stuff, yeah, it does work. I mean, we've looked at every chart possible over the past, week. We've got all sorts of charts. The problem with charts is that for a lot of folks, they're not really into seeing charts 24/7. Not really. I mean, we've got systems running charts all day long. Look at right here. We just got a silver buy. Go ahead and buy that 9 EMA. Then you're right there. Boom. You can either put your stop loss here or beneath that swing low, or this area right up in here, maybe for a market structure type of a trade, or you could bring this down to just a 1-to-1. And then we can start talking about the fractal nature of markets, and I can start talking about order flow and volume. But you see, that loses a lot of people. That's for sure, F8. That loses a lot of folks. So we try to give a little bit of things to everybody. A lot of the folks that tune in really like the psychology, so I like telling the stories and bringing some psychology. A lot of folks like systems like this where they could actually just sit there and copy trade. Unfortunately, that's not the business I'm in. I'm not a signal provider or a coffee trade person, but I hear you. And it is tough. It's tough not to to really deliver to everybody. So I just sort of do what I want, and we try to service as many questions as we can and try to give a little bit of a feel of the systems end of it, the analytics end of it, and then also the news end of it. That's for sure. But good observations. I love the heat. Any comments are always welcome. That's for sure. Let me see. Team Marina, somebody's on the wrong channel if all they want to see is charts. I don't have any stress, F8. Don't worry about it at all. I appreciate it. Ralph H., I appreciate that, Ralph. Thank you. All right, guys, we're going to run through a few probabilities of the way forward here on the Iran story. You can see that's an interesting trade right there in silver. That would be a really tough one not to take. 15-minute chart, it's a buy signal in this environment. You're probably going to be in decent shape with that trade. As far as the stop loss goes, it is big. It is a big stop loss, but maybe you could adjust it and put it right beneath your signal bar there. That's a possibility. You just want to make a much tighter type of a trade. I would be looking to do something like that. Once again, silver trading beneath 90. Do you want to play the break above 90? It's definitely added risk. Maybe you put it right down there, right around 90. I mean, that's exactly where not the market profile guys, but the smart money concept traders would put it right in there. That's for sure. I don't know. All right, we got a few other things that we need to talk about here. And then we're going to go ahead and roll out. Trump outlines war's objectives, says the U.S. will easily prevail. I don't know. This is all hearsay at this point. We don't really know. 4 U.S. service members are confirmed killed in action. U.S. military leaders said more forces are headed to the regions. 3 U.S. F-15s crashed over Kuwait. Friendly fire incident, no casualties. Saudi Aramco's refinery was hit by a drone. Thousands of flights have been canceled. A lot of folks are stranded in Dubai right now. Congress aims to vote on Iran war powers resolution this week. That's going to be intense, what happens in Congress on that vote. We're going to have that coverage for you as well. Insurers are raising prices for tankers transiting the Strait of Hormuz. We just talked about that. Iran strikes Qatar's LNG, shaking global energy. It didn't really do much. It didn't. Natural gas relatively flat. U.S. war against Iran entered its third day on Monday with Joint Chiefs of Staff General Dan Kane, Raisin Kane, vowing to deploy more forces to the region. And that is what we need to know, more forces to the region. So Trump and ground troops. The next question for us will be, is the United States going in on the ground? That's where we start to talk about some real war and real it's not real war. I misspoke there, but a real divide here in the United States. Right now, this isn't very popular. This isn't overwhelmingly popular, what's happening. This is an election year. And ground troops, I would be surprised if they go in. But if they go in on the ground, and we talked about this during our overnight stream last Friday, it's going to be a fascinating time to be in the markets. That'll be one of those things that could really bring them off. Tina asked a little bit earlier. That one could definitely bring it off for sure. So definitely keep an eye on this. Trump won't rule out ground troops in Iran. Really difficult to see that happening. But if it does, if they do go in, that's going to be a whole new ball game, and we'll have all the coverage for you. As far as this right here, will the Iranian regime fall by June 30th? Look at this. This has been all over the map. A regime falling is a lot different than just a decapitation strike on the leadership. You have 250,000, I believe, armed. They say they have a 1 million-man army in Iran. I don't know about that, but 250,000 armed elite guards, elite Iranian guards. That's fascinating. You have a population of 93 million in Iran. That's no small feat. That's a lot of people. And, the idea is to try to avoid some sort of civil war here, but it's unpredictable how it's going to play out. A vacuum has officially been created there now. Do other players in the regime step up and hold serve, or do they give way? It's a challenge. It's a real challenge to know what's going to happen there. So will they fall by June 30th? Buy yes, buy no. Right now they're saying no on poly market. This is a huge market. Right now they're saying no by June 30th. So the reason why I brought this up is we're not talking about just a few days, weeks, months. That's really what we're looking at here. So it's absolutely huge. I don't know what happens there. As far as this, will the Iranian regime survive military strikes? 66% say yes. So right now, the people that are, and listen, I know you're like, oh, these are just gaming markets somewhere. These are huge markets. There's people with millions and millions of dollars in these markets. They've been proved to be incredibly accurate. And what you're seeing here is the overwhelming sort of thought of what's going to happen right now. The common knowledge is that you're not going anywhere, that the next people in the regime are going to step up, and it's going to be business as usual. Wow. What does that do to the markets? What does that do to anything? I don't know. It sort of suggests that stability may be on the way. Maybe the next folks in the regime, maybe the regime stays in power, but they're more likely to deal with the West. Who knows? I have no idea what's going to happen. But that right there, that's surprising, because with that kind of military armament and the kind of talk coming out of the West and what they're planning to do for the next 4 to 5 weeks, supposedly, how could anybody in the regime be left? Yet that's what we're seeing. That's what we're seeing for sure. Let me see. Lebo, I'm embarrassed to say this, but I don't know how to use MetaTrader. That's all right. I'm strictly and only a TradingView user. I like TradingView. I go TradingView's all my analytics, and then I place trades on a different platform. I use TradingView for everything, and that's that Pine connector functionality. MetaTrader 5 is pretty good for entering trades. I like the drag and drop functionality that we just executed this silver trade. This is an interesting trade. It really is. But I can see where if you're an analytics person on MetaTrader 4 or 5, it's a bit of a challenge. That's for sure. Let me see, David. Good to see you, David. How do I combine time frames like the 4-hour, the 30-minute, and the 5-minute? Which one is for key levels and which one is for setups? How do I stop getting faked out? Okay, great question. And then we're going to have to go ahead and leave it there because we got a lot to do today. Let's just go back to our this is a good way of looking at it right here. Here's our Nikkei chart. David, one of the things that I always sort of preach on these live streams, and I probably shouldn't do it so much because it does turn a lot of people off, but that's okay. Multi-time frame analysis is absolutely everything for me. But I start with the larger time frames and I trade them on short ones. So as a general rule of thumb, the shorter the time frame a chart you have, the choppier it's going to get. So let's take a look at this Nikkei on the daily, okay? So you see you sort of have a choppy, sort of a doji range here on your daily, but you can see that you do have some nice price action and a pretty nice price wave there. Well, let's say you take this down to a 30-minute chart. What do you have? Well, you can start to see that during that, let me see, this would have been right around the Tokyo Open. Somewhere right in here. Yeah, right here. Well, that would have been that's not true. That's the Futures Open. But right in here, Tokyo Open, right? 30-minute chart, you can see just how choppy it gets. And then you get a move, and then it starts getting choppy again because the volumes aren't nearly as consistent throughout, a 24-hour period, say on a 30-minute chart. Whereas our daily ranges are going to give us a much greater picture of what happened. I know immediately by looking at the daily, I say, okay, it's a doji, it's choppy, right? Well, on the 30-minute, you may not always know that. You might have said, okay, well, here's the big move. All right, there we're trending up. Well, and then it stops, and then it reverses, and that's exactly how you could have got chopped out. So I always say that the longer time frames to me are more important, especially for identifying market state. Like my key support and resistance levels, monthly, weeklies, dailies, and then we go to intraday price action. So you've got a 30-minute chart here. We'll take it down to, say, a 5-minute chart. Now what's happening? Now it's ugly. No real direction there. So, well, long story short, general rule of thumb is if you want to stop getting chopped up so much, depending on what you're trading. Like I see this in the Forex all the time. Let's just go back to that Euro USD. A lot of folks will trade the Euro USD, say, on a 5-minute chart, right? Well, that's great. Decent movement. But the chop, I'm chopped here. I was long, I got chopped. I was short, I kind of got chopped. Well, what do I do to fix that? How about a 4-hour chart? Pretty clean on a 4-hour chart. So the next question is, well, the ranges are too big. It's too expensive. I'd say take your leverage down. Take your leverage down and look to maybe expand your profit targets a little bit. That's all. But it's a great question, David. Multi-time frame analysis. I could sit here and talk all day long about it. The biggest thing that I would say is that remember, work long to short. Don't get caught up with 1-minute charts thinking that they mean everything, because you'll see that on those 1-minute charts, the smaller the granularity, the less consistent the volatility, but the volume and the participation. And as that participation smokes in and out, it makes the technicals less reliable. It's the way that I've sort of seen it. All right, everybody, I'm going to go ahead and sign off for today. Fantastic stuff. I want to thank everybody that joined and contributed in the live chats and that also had some questions. So tomorrow we're going to be back, remember, twice over on Switch Markets. So if you want to see all the action, Switch Markets on YouTube, feel free to join us there. I'll also have the newsletter out before the London session tomorrow. So that's going to be good. And then also on the Switch Markets YouTube, our hot picks of the week. I'm going to give you the breakdown on gold, silver. We're going to look at U.S. oil, UK oil. I'll have some levels for you there. And then potentially look at the VIX and the U.S. dollar. A lot going on. Bring all your questions, and then we'll be back. We'll be going 2 times this week, so then we'll be back at our normal time across all of our platforms on Forex Signals TV, on How to Trade TV on YouTube, and then also on the Switch Markets and at Shane V_Trader on X. All right, everybody, that was a mouthful. We went way long today, but I think that's going to kind of how it's going to be. At least I wanted to get off on the right foot here on this Monday session. A lot going on in the world. The biggest thing you need to do is manage your risk and stay safe. Safe. Caution's the better part of valor. Remember that. All right, everybody, have a fantastic trading session. As always, trade the action well, and we'll talk soon. See you.